If you're truly looking to retire early at the age of 40, 45, or 50, I want to show you how dividends really work for your overall income tax while you're working and when you're retired. It's not a secret that the US has the most complicated tax system, and I don't think people in Congress even understand how taxes work. So I'm here to break it down for you so that you can have a better understanding of dividend tax, ordinary income tax, and you have to be extremely careful with your tax planning because you could end up paying more taxes than you expect into your dividend income.
And good luck for today.
In this scenario, let's assume that you're single and 25 years old and you're brand new to investing. Your W-2 income is $60,000 a year, but your taxable income is actually only $45,400 after the standard deduction of $14,600. So what that means is that the first $14,600 you earn is tax-free. So you don't actually start getting taxed until $14,600 first dollar. And let's also assume that you make $250 in dividend income. So the first 10% of the federal income tax will be taxed at $1,160. The next bracket is at 12%, which is taxed up to $47,150 of your income. But because you only have $33,800 remaining on your taxable income, your 12% is taxed at $4,056. That makes sense so far, right? So your marginal tax rate is the highest tax rate you're in. And in this case, you're at a 12% marginal tax rate. So your W-2 income is at the 12% marginal tax rate. And your dividend income comes from the $5,000 investment inside your taxable portfolio. In this scenario, let's say you start investing. So you have $150 in qualified dividends and $100 in non-qualified dividends. Qualified dividends are taxed at 0 or 15% in this scenario, and non-qualified dividends are taxed as ordinary income tax. And because your total income is under the 0% capital gains tax rate, your $150 is actually taxed at 0%. So if you're single and a low income earner, this is actually a great time for you to take advantage of the dividend income because you're in the 0% capital gains tax bracket. And as far as the non-qualified dividends go, with $100, you're going to be taxed at 12% or $12 under the marginal tax rates because it is taxed as ordinary income tax. This is pretty common for brand new investors or people who bought new stocks, ETFs, or mutual funds because they didn't meet the holding period. So your effective tax rate is the total taxes you pay divided by adjusted taxable income. So if you add them all up, the total taxes you pay is $5,228, and then divided by $45,650, there's a typo there, it gives you about 11.5%. If you got some value out of that, you should consider joining my private client program and schedule your first session with me by visiting firestrategy.com/coaching. And let me give you another example. Let's say you are married and filing your taxes jointly at the age of 30. Your total W-2 income is $100,000. So with $29,200 in standard deduction, your taxable income is actually $70,800. This means that the first $29,200 of your income is tax-free. Additionally, you get paid $5,000 in dividend income that you reinvested into the stock, ETF, or mutual fund. And let's calculate the taxes for your W-2 income first. After the standard deduction, the first $23,200 will be taxed at 10% or $2,320. The next bracket at 12% is up to $94,300 of your income. So the remaining $47,600 will be taxed at 12% or $5,712. Married couples have a higher income tax threshold. So you could make $123,000 and still only pay up to 12% in marginal tax rate. And let's say your $5,000 dividend income came from your taxable brokerage account that you reinvested. Of that $5,000, $4,000 is in qualified dividends, and the other $1,000 is a non-qualified dividend. But because your total income is still under the 0% dividend tax rate, the $4,000 qualified dividends are taxed at 0%. That's right. That $4,000 is completely tax-free. How awesome is that, right? And the remaining $1,000 in non-qualified dividends is still taxed at 12% under the ordinary income tax bracket. And it would be an additional $120 in the income tax you'll have to pay. So if you're married and filing your taxes jointly, then your income tax threshold is much higher for both W-2 income and dividend income. So if you're married and watching this, you have much more room to pay no taxes for the dividend payment and still pay extremely low taxes for the non-qualified dividend payment. But what if your income starts to go up? Let's say you're single and make $80,000 now from your job and make $4,000 in dividends in 2024. Your tax bracket is a bit higher now at 22%. But keep in mind that the US has a progressive tax system. So your income between $47,151 and $100,525 is taxed at 22%. In this case, only $6,650 of your income is taxed at 22%. So your marginal tax rate is at 22%. And let's assume that you have $100,000 invested with $3,000 in qualified dividends and $1,000 in non-qualified dividends. Because you're already over the 0% capital gains tax bracket, that $3,000 is going to be taxed at 15% or $450. So you're going to owe $450 to the IRS when you file your taxes in the following year. And the $1,000 non-qualified dividends will be taxed at 22%, which is even higher than the 15% capital gains tax rate. So if you're single and you're already at the 22% marginal tax rate, you should be very aware of how much of your investments pay you in non-qualified dividends and how much of that will be in qualified dividends. And let me give you something more complicated here. And let's say you're married and filing your taxes jointly, making $120,000 a year with an extra $5,000 in dividend payment. Your total taxable income is going to be $95,800 after the standard deduction. Your marginal tax rate, again, is now going to be 22%. But because you're filing your taxes jointly, you're going to be at 22% as long as your total adjusted gross income is under $201,000. In this scenario, the remaining $20,000 of your income is taxed at 22% or $4,400. So if you have any non-qualified dividends, you will be taxed at the 22% marginal tax rate. But for this scenario, let's just say you have the $5,000 in qualified dividends. Just because your taxable income is right at the $94,000 cutoff, you have to figure out how much of your $5,000 qualified dividends will be taxed at 0% and how much of it will be taxed at 15%. So the formula is really simple. To me anyway, it is simple to me, but may not be simple for you. It's your total taxable income at $95,800, and you're going to subtract it by $94,050, which is the maximum income for the 0% capital gains tax rate. So the first $3,250 will be taxed at 0%, but the remaining $1,750 will be taxed at 15% or $262.50. This is a pretty common scenario for married couples filing their taxes jointly. If you want to accurately calculate your capital gains tax for the year, you want to make sure you're aware of your total taxable income and if it's right on the edge of the 0% capital gains tax bracket. Now, let's go into the retirement scenario. Let's say you're 50 years old and decided to retire early from the workforce in 2024 and just live on your dividend income of $58,000 a year. So with a standard deduction, your taxable income is $43,400. And inside your investment portfolio, you're going to have $1.5 million with $52,000 in qualified dividends and $6,000 in non-qualified dividends. So keep in mind that $6,000 in non-qualified dividends is still tax-free because the standard deduction is $14,600, right? So technically speaking, you could have $14,600 in non-qualified dividends and still pay $0 in taxes. And $52,000 in qualified dividends are still taxed at 0% under the long-term capital gains tax rates. So in this scenario, you pay $0 in taxes with $58,000, and you can make $61,000 in total dividend income and still pay $0 in taxes. How awesome is that? By the way, did you know that over 50% of Americans who make over $100,000 a year are living paycheck to paycheck? So is it always an income problem or a spending problem? If you're having trouble figuring out your budget, I encourage you to download a budget app called YNAB. YNAB stands for You Need a Budget. That's right. Whether you make $50,000 a year or $200,000 a year, every one of you needs to create a budget to achieve financial independence. You need to give every dollar a job so that you can be more intentional with your savings and spending. You can get a free trial without any credit card information by using the link in the description below. But what if you're looking to have a part-time job in your early retirement. And let's say you make $50,000 in W-2 wages and $40,000 in dividend income, which is a total of $90,000 in gross earnings. After the standard deduction, your taxable income is $75,400. So you want to first calculate your W-2 income, which is taxed at 10 and 12% in marginal tax rates. And your investment portfolio pays you $40,000 in qualified dividends. And because your total dividend income is right on the edge of 0% and 15%, right? You'll have to first figure out how much of your dividend payment is going to be taxed at 0% and how much of it is taxed at 15%. Your total taxable income is $75,400. And you subtract it by $47,025, which is the maximum dividend income for the 0% capital gains tax rate. Then it gives you $28,375. So what that means is that the first $11,625 of that $40,000 is going to be taxed at 0%. But the next $28,375 is taxed at 15%. The total taxes owed are $8,200 or 10.9% of the effective tax rate. Now, this is a little bit complicated, but let me go in for the people that are filing their taxes jointly while they're retired. So let's say you're both 50 years old and decided to retire early from the workforce in 2024 and just want to live on the dividend income of $120,000 a year. So with the standard deduction, your taxable income is $90,800. Inside your investment portfolio, you have a massive $3 million investment portfolio with $100,000 in qualified dividends and $20,000 in non-qualified dividends. So keep in mind that the first $20,000 in non-qualified dividends is still tax-free because the standard deduction as of 2024 is $29,200. So you could have $29,200 in non-qualified dividends and still pay $0 in taxes. And $100,000 in qualified dividends are taxed at 0% under the long-term capital gains tax rates after the standard deduction. So in this scenario, you pay $0 in taxes with $120,000. I don't know about you, but having $120,000 in tax-free dividend income sounds like a pretty sweet deal to me, right? And if you're looking to work and have a dividend income with a total of $100,000 a year, you have to keep in mind that some of the dividend income is going to be taxed at 15%. If your W-2 income is already above the 0% threshold, then your dividend tax is going to be 15%. So again, you're going to have to subtract $94,000 from the 0% threshold from your taxable income to figure out how much of that dividend income is going to be taxed at 15%. The first $23,000 of your dividend income is going to be taxed at 0%. Then the remaining $16,750 is going to be taxed at 15%. So being married actually puts you at a lower tax bracket. You actually only pay 10.5% in effective tax rate with a total of $10,500. Wow, not bad, right? So I just gave you like 8 different tax scenarios with a dividend income. So I'll make sure to leave some chapters in the description below. The tax system can be pretty complicated, and this is something we should have been taught in high school, but here we are. The bottom line is that you could save a lot of taxes if you carefully plan for your retirement. What you also need to be aware of is that you will pay dividend taxes every year, even if you choose to reinvest them right back into the same investments. So if you're a high income earner, there are ways to avoid paying dividend taxes every year by investing them into a 401k, IRA, HSA, or other tax deferred retirement accounts. But the most important thing you need to do is to first identify what type of investor you're going to be. You might be an aggressive growth investor or a moderate income investor. Maybe dividend investing may not be the right option for you if you're looking to have much bigger growth and risk in your portfolio. Either way, get your investment calculators from my website for absolutely free by visiting 5chatchat.com/resources.